Hi everyone, welcome to my channel. My name is Victoria and today I have a super cool video for you, and it's not about real estate. It's actually about credit scores. Credit scores and credit history is a very cool topic, and it's very important to have one and to have a good score. When I came to the United States, on day one, people started telling me, Victoria, start building your credit history, work on it because you're gonna need it. And luckily for myself, I started learning right away and I built a credit history, and I actually was able to attain a perfect credit score. So today I want to talk more about credit score, and my main focus is going to be on FICO credit score, just because it's being used by 90% of lenders. And at the end, I will give you guys some tips on how to increase a credit score and how to repair a bad credit score. Before I start, I really want to dispel two myths. Myth number one: if you have a bad credit score, you're stuck with it for good. It's absolutely not true. People with bad credit scores can attain a great credit score. 700 is attainable, 800 is attainable as well. It just requires a lot of planning, time, and a good action plan. And myth number two: income affects credit score. Again, it's absolutely not true. Income does not affect credit score at all. There are people who make $10,000 and they have perfect credit scores, and there are millionaires with bad credit scores. So you can see. Let's start, shall we? A credit score is a number that summarizes your credit risk based on credit data. And credit data is coming from three main bureaus, which are Experian, TransUnion, and Equifax. The Fair Credit Reporting Act requires all three credit bureaus to provide consumers with one free credit report per year. So if consumers go on annualcreditreport.com, they will be able to download a free credit report once a year and see 7 years of their credit history. So that particular report does not include FICO score, and we're going to concentrate on FICO score in this video. So what is a FICO score? FICO score is a 3-digit number that summarizes your credit risk. It helps lenders to determine how likely a person to repay a loan. FICO is an abbreviation which stands for Fair Isaac Corporation, and the company was founded in 1956 by two people. It was an engineer, Bill Fair, and mathematician, Earl Isaac. And they first introduced their FICO scoring system with Equifax in 1989. So FICO is basically a mathematical algorithm. There are many different versions of FICO score. In 2000, there was a version 5, 4, and 2, and it goes by FICO Classic Scoring Model. And this is actually the version that a lot of lending institutions use, the ones that deal with mortgages. In 2008, there was a FICO version number 8, and that's actually the most popular FICO score. In 2014, there was a FICO version number 9, and in 2020, there was a FICO version number 10. So you would ask, why so many different versions? So pretty much like any software, they are just becoming better and better, and they have their own updates, and they become better indicators of risk tolerance. FICO scores range between 300 and 850, and the only website that will give consumers the exact FICO score as financial lending institutions use is myfico.com. It is not a free website, and there is a service that consumers will need to pay for, but they will be able to get that score And there will be many different versions again, like FICO 8 and FICO 10, and also the consumers will need to scroll down to see FICO classic version if they are thinking about applying for a loan, so they know exactly how lending institutions will see it. So on myfico.com, there is a wheel. Basically, it shows what goes into that particular credit score. And we are going to talk about it. So 35% of FICO score is being affected by payment history. 30% is debt utilization. 15% is the length of credit history. 10% is credit mix, and another 10% is new credit. So now you know a little bit about FICO and what goes into FICO scoring model. Now let's talk about what you can do to increase the credit score. The first tip that I have for you guys is just never miss a payment. That's extremely important. 35% of FICO score is based on payment history, and it is extremely important to pay on time. So I'm going to talk about past due and late payments. Past due, it's something that pretty much self-explanatory, that's past due, but it does not affect the credit score that much if there is a payment made, you know, and the score rebounds instantaneously. In order for an account to be late or for a payment to be late, it has to be 30-day late. But that impacts your credit score in a really bad way. One late payment can hit your score down to as many as 80 points, and late payments stay on credit history for 7 years. After 30-day late payment, it goes to 60-day late, 90-day late. Like after 6 months of late payments, the account is in severe delinquency and it can go to a charge-off status or go to collections. And when it goes to collections, obviously their credit score gets affected even more. But let me tell you something about collections. There are 3 letters, DLA, and it states for date of last activity. So why is it important to know? Of course, when account goes to collection, as it ages out, it impacts your score less and less. And let's say if a consumer decides to finally make that payment, and they will call the collection agency and will say, yeah, I want to make that payment. So what's going to happen? Actually, the credit score will be affected even more, and that payment can hit you up for 10, 15, 20 more points, just because the collections will go from open collections to paid collections. And date of last activity will be the date of payment. So basically, if there is an account that has been in collections for the past 2 years, right? Once you make that payment 2 years later, or like, let's say today, the date of last activity is going to be updated to today, and that's going to impact the score. So that's important to know. There are professional people who know how to deal with collections, who know how to do it in a correct way so the score does not necessarily get impacted in a negative way. And if you do have any collections accounts, I would strongly recommend to reach out to those people. What I can tell you that if you do decide to act on your own and just make any payments, I'm not suggesting it, but a good way to do it is just never pay with a debit or credit card or a bank account. Pay with a bank or certified check, and definitely retain the settlement letter. Also, what you need to do always, like not only when you're paying collections, but just anything, always get documentation. That's extremely important. Get the name, extension number, because that's going to be your proof. A word about medical collections that works a little bit different. So when there is a medical debt, it's better to pay not to collection agency, but to either a hospital or a doctor directly. And believe me, they will be happy to take that payment just because they will be able to get the entire payment versus collections agencies when they keep certain amount of money to themselves. So that could be done, and then once the payment is made, doctor's office can call collection agencies and update it and just remove the account from collections. But this is how it could be done. Also, so in terms of federal loans usually don't come up on credit report, but there is a report that lending institutions use. It's called Kavers report, and they look for any unpaid federal loans. So let's say if a person wants to apply for government-backed loan, like a FHA loan or VA loan, and if the lender looks through Kavers report and see any unpaid like federal loans, the outcome of that loan might be very bad and the person might not even get it. So with student loans, there are two different ways how to pay collections. Well, number one, research if there is a rehab program, and number two, it could be just consolidated. The entire debt could be consolidated, but again, that might negatively affect the credit score. As of 2017, IRS no longer reports tax liens to the credit history. In terms of public records, the only thing that negatively impacts credit score is actually bankruptcy. So there are two different chapters, Chapter 7 and Chapter 13. Chapter 7 wipes off the debt completely, and it stays on the credit history for 10 years. Chapter 17 offers a payment plan, and it stays on the credit report for 7 years. So here's a tip. If someone is thinking about filing for a bankruptcy, and let's say they start already doing all their paperwork and then they change their mind and they like, okay, I don't want to do the bankruptcy, the filing record will stay on the credit report and it will negatively impact the credit score as well. So here are some things to definitely consider, but again, just never miss a payment. It's extremely important that you pay on time. And how can you do it? Like, you can definitely set an auto pay. You can set up different notifications in your calendar, or sometimes if you do have a lot of credit cards, it's really good to create a spreadsheet like in Excel and check on it every week or every other week to make sure that you are staying updated on important dates like due dates. So another tip that I have for you guys is just get current and don't carry a balance. It does affect your FICO score, your credit score, but it also affects your finances, just because let's say if you don't have this introductory 0% APR, if you do have a balance left unpaid, then it will get affected because you're going to get hit for that APR and you will end up paying more. So it's really good to get current, try to budget, don't overspend, because that's important. With credit cards, it's so easy to do that because you're really not thinking that, oh, it's money. You're just swiping your card, and the next thing you know, there is a really large amount of debt and you're not able to pay it off in the same month, and then you end up paying more. So just try not to do that. Like, budget, that's important. Another tip that I have for you guys is just stay on top of your credit score. Well, first of all, as I mentioned at the beginning, consumers have the right to get one free credit report per year from all 3 different credit bureaus on annualcreditreport.com. Also, a lot of credit cards nowadays, they have their own scores and they send them to their customers. It's always good to read through that report to see what has changed, to see if there are any errors. If there are any errors, it's good to call the credit company directly and have it disputed. Let's say if the chart something is negative there and it has been fixed, that negative data will fall off and the credit company will update the credit bureau, and the credit score will get updated within 30 to 60 days. Also, again, identity theft is a really big thing, and it should be watched for. So just stay on top of that. Just be mindful. Let's say if it's a free credit report, the credit score is going to be higher than it actually is, just because those free credit report companies, they use their own algorithms. They interpret data in their own way, and according to a free credit report, a person might have like 720 score, but when they go to a lending institution, it will be discovered that actually the score is lower, and it's, for example, like 680 or 690. So just be mindful of that. But again, at least you will get a general idea what the score is and what has changed in that monthly snapshot. Be protective of your personal information. Identity theft is real. It's happening. I'm sure it can happen to anyone. I was a victim of identity theft, and believe me, those are not fun things to deal with, just because you have to be on the phone all the time. The credit history might get ruined. It's a lot of headaches that you might be dealing with. So what could be done? Basically, you could set up fraud alerts. You can sign up for text messages and emails with a credit company. So let's say anytime there is a charge on your credit card, you will get notified, and you will see, basically you can act depending on whether it's your charge or not your charge. Also, people who are really afraid of being victims of identity theft, or let's say they are planning like a major purchase, what they could do, they could just do a credit freeze. So what credit freeze does, it actually prevents you or anyone else from opening new credit cards. The only thing is, be mindful, just you will create a PIN. Don't forget that PIN, because let's say if you need to unfreeze that credit, you will, and if you don't know the PIN, you will need to go through a lot of hoops to get it done. So it will be very, it's not going to be easy. That's why, like always, just, remember that PIN number. Don't open too many new accounts and new credit cards. I know it is enticing, especially when there are credit cards with promotional 0% APR for 12 or 18 months. And you think, okay, I could use that card and just like, I'm not going to pay any interest. Or sometimes you're in the store, maybe around holiday time, or maybe you're just in the store shopping and you're about to make a purchase, and somebody comes up to you and say just, hi, would you like to open a new credit card today? If you do that, you can save 40% on your purchase, right? That probably happened to a lot of us. And then you think, oh my God, that's so cool. I can open that credit card. I can take advantage of 40%. I can save. And then what I'm going to do, I'm going to pay it off and I'm going to close that account. Definitely don't do that, just because you're getting hit for like so many things. Like, number one, it's a new inquiry, which is 10% of the score. Number two, that is, if you close an account, that's going to affect the length of your credit history. And number three, it will add to your credit utilization, might just get like to you might get to a higher number. So it's definitely not worth it, but I know it is enticing. Like, a lot of credit cards, they are offering cash back, they are offering miles, they are offering like many different things, and of course it's difficult to say no. But again, just have a certain amount of credit cards and try to stay away from opening new ones. If you're planning on taking a mortgage, Try not to open any new accounts prior to that. If you need to take any new loans or anything like that, just like wait until your mortgage is approved and you close, and then just apply for a new mortgage. Because if you get new loans, that will potentially harm you in terms of getting a better rate, or sometimes, you know, they will look at debt to income ratio, and with new loans the debt will be higher. So the next tip that I have for you guys is just keep your credit balances at 30% or under 30%. That's the best thing to do. And it should be in total and individually. There are different tiers of credit utilization, and the best way to utilize it is actually to have zero balance. But if you need to spend, then the first tier is 0 to 15%. Then the second tier is 15 to 30%. Then 30 to 40%, 40 to 50%, 50 to 100, and 100 plus. And believe me, there are some people like that as well. So what to do if you do need to spend maybe more than 30%, but you still want to keep building a good score? The best thing is to ask for a credit limit increase. And it could be done online, it could be just a simple phone call, and a consumer could call and ask not to run their credit history, but like to look at the account, and based on their relationships, ask for that credit limit increase. And it's not guaranteed, of course, but that can happen. So here's an example. Let's say if someone has a credit card with a $1,000 limit and they spend $600 a month, they need to have it. So it's 60% credit utilization, which is already not good. You know, that's going to impact the credit score negatively. So what could happen? That person can call the credit company, ask for a credit limit increase, and if it does get increased to 2,000, and let's say that person spends 600 again, now it's only 30% of credit utilization, and that can help with building a better FICO score, or just like credit score in general. Another tip that I have for you guys is just to have a variety of credit, and that actually 10% of their credit will chart goes to variety. It's always good to have like a mix and match, and this is what the credit system is looking for. As a general rule of thumb, it's good to have a few credit cards, usually between 3 and 5, mortgage loan, personal loan, home equity loan, auto loan, student loan. But again, if there is something that you don't have, let's say you don't have a student loan, it doesn't mean that you need to rush back to school and just get a student loan. Not at all. But again, just variety is always good, and it helps to build a credit score and to increase the credit score. Next tip, do not close old accounts. Sometimes you need to close just because maybe there are high membership fees, and that's okay. But normally it's not good to close any accounts just because that affects the length of credit history. And let's say if there is an account that someone has had for 15 years and they decide to close it, then that's going to be gone, and the credit length is going to be shorter now. So just try not to close them, and closed accounts stay in credit history for 10 years. If you're a business owner or have any kind of business, just try to separate personal credits and business credit. And for that will be good to open an S corporation or LLC. So let's say if the credit score in that company is ruined, the personal credit score is not going to be affected, and that's important as well. And I have a few great tips that I saved for you guys for the end of the video. Number one is a secured credit card. That's actually a great way to get started. That's actually how I started building my credit history. Secured credit cards are good for someone who doesn't have a credit history or has just very little of credit history. They work pretty much the same way as credit cards, but that person who is applying for a card needs to make a cash deposit up front. And let's say if they are to get defaulted, that money is going to be like a security for the credit card. Tip here is to look for a secured credit card with low membership fee. And also it's very important that that particular credit card gets reported to all 3 major credit bureaus. So another tip that I have for you guys is just if someone doesn't have a good credit score and wants to get like a little bit of a boost, they can have themselves being added as an authorized user to someone with a great credit history, maybe someone like a family member. And that person does not have to be added to every single card. They can be added only to one card. Obviously, it has to be a card with a good payment history and with a good length of credit history. And that's going to be a major advantage because within 30 to 60 days, if the credit stays good, their authorized user will also get a credit boost. And the third tip that I have for you guys, if you are about to apply for a mortgage loan, I want you to know that a lot of banks, a lot of lending institutions use something that is called a rapid rescore. So what it does, it just helps to boost the credit score as well and quickly. Obviously, there's some documentation that needs to be provided. Let's say if a person's score not high enough due to high balances. So what can be done? That person can make a large payment or pay it off completely, have that documentation, submit it to the bank. Bank will submit it to the credit bureau, and the credit score will be updated within 5 to 10 days. Just because mortgages are very often time sensitive, that's why lending institutions offer that feature. They actually pay for that, and not every single bank will have it. But it's a really good thing for you guys to know that that could be done. As you can see, guys, credit score is extremely important. If someone wants to apply for a mortgage and get a conventional or jumbo loan, they will need to have a minimum credit score requirement. A lot of banks require a minimum score of 620. If it is a government-backed up loan, like for example at FHA loan, then a person who puts 10% down can probably get away with minimum of 500 credit score. If they want to put only 3.5% down, that the minimum requirement is 580. Even sometimes when you want to rent an apartment, the credit score will be checked. If a person wants to apply for a new job and let's say work in banking or financing area, the credit score could be checked as well. So there is no way around it, it just needs to be built, it needs to be worked on. But as I mentioned, credit score can be increased. Dropping credit score can happen overnight, but building the score back up requires more time. It requires a good action plan, but it is attainable. 700 credit score is attainable, 800 credit score is attainable. So I hope that you guys were able to learn something new today. Please treat this video as an informational video only. If you like this video, please give me thumbs up. If you have any questions or any comments, please write your comments below. Consider subscribing to my channel. And thank you so much for watching. I will see you soon.